Hey there, Jonathan Rodriguez here for Rich Retirement TV, and today I want to answer a burning question that I've been getting from friends, family, readers consistently over the last couple of months. How can stocks be soaring amid a sea of bad news? Right, rising COVID-19 infections and deaths, tanking GDP, soaring unemployment, riots in the streets. How on earth could stocks be surging at a time like this? And I'm here to tell you that the answer is very, very simple. And not only do I think that the stock market rally that we've seen is going to continue, I think it could turn into a historic rally that makes the 2008 rally, or the post-financial crisis rally, look like a little baby rally. And I'll show you what this means for you and your retirement and how you can cash in. So let's go ahead and dig right in here. Before we get into the answer to this question, I just want to take a look here at some of the headlines that have been plastered across cyberspace over the last couple of months here. This is from CNN. Nearly 43 million Americans have filed for unemployment benefits during the pandemic. From CNBC, Goldman, referring to Goldman Sachs, the famous investment bank, Goldman sees 15% jobless rate and 34% GDP decline, followed by the fastest recovery in history. Well, the second part of that headline sounds pretty good, but the first part, not so good, right? This headline comes from the International Monetary Fund, IMF for short. The Great Lockdown, worst economic downturn since the Great Depression. Anyone that uses the Great Depression in a headline is looking to strike fear into your heart. Let's take a look at this last headline here from MarketWatch. Don't be fooled. A 40% drop could hit by next year after this bear market rally fades. Veteran economist warns. Now that's scary stuff. But how does that jive? How do these massive bad headlines jive with this chart right here? This is a one-year chart of the S&P 500. And sure, we saw a pretty big drop from February into March. One of the fastest drops in history, no doubt. But off that bottom, stocks have soared. In fact, the S&P 500 is within striking distance of the all-time high it put in February, nearly recovering all of the coronavirus crisis losses. So what gives? The answer is very simple. We have seen an unprecedented level of stimulus pumped into the economy over a very short period of time. More than $4 trillion has been pumped into the economy between the Federal Reserve and Congress. This is the size and scope we've never seen before. Take a look at this chart. This is M2 money supply over the course of the last year. And this is M2 is the total measure of money in the United States economy. Take a look at this. When the money printers start burring, it's not much longer after that the stock market finds a bottom. S&P soars off of this bottom. And this low here correlates with the passage of the first stimulus bill from Congress, which injected $2 trillion directly into the economy here. Stocks are surging right alongside this cash infusion. And in my view, the 2020 stock surge is just getting started. If we look at 2020 through the lens of 2008, where we saw a similar global financial shock that had the potential to cause a Great Depression, well, things got rough, but they didn't get as bad as the worst predictions had us thinking. And that's because the federal government stepped in with, at the time, an unprecedented level of stimulus, led by the Federal Reserve. If you take a look here, this is 2008. So just like we've seen in 2020, money printers start going. 3 months later, you see a bottom in the stock market, and within 1 year, the S&P nearly doubles. Within 5 years and a couple more rounds of stimulus, the stock market recovers, or the S&P rather, recovers all of its financial crisis losses. Incredible, right? Let's take a look at 2020. Fed stimulus right here to the tune of $1 trillion. Market bottom, stock market surge. 2020, $3 trillion. 3 times the size. Market bottom, stock market surge. Where do you think stocks are going to go from here? If you look at 2008 and just the 5-year period after the Fed stimulus gets injected. I'll give you a hint. Stocks got a whole lot of room to run higher. And don't get me wrong, the economy is in rough shape. Americans are out of work. Americans have died because of this awful COVID-19 virus. But, the shoots of recovery are here. Unemployment rate is going down. Starting to see a pickup in consumer sentiment. That's going to translate into consumer spending. All of these good elements of this economic recovery are going to translate into the stock market. That's why the market is surging, because it's an expectation of future profits from the economic recovery, which is underway right now. So what does this mean for you? It's very simple. Stimulus plus stocks equals rich retirement. If you're in retirement right now and you've received stimulus, and let's say you don't need it, the stock market, as you know, is likely going to surge much, much higher from here. So using that stimulus and putting it into the stock market, as opposed to putting it in a savings account where you're going to earn nearly nothing, you're not going to outpace inflation at all. Putting it in gold, where if inflation rises, yes, gold is going to rise, but will it rise as much as the stock market? Probably not. The stock market offers you the best home for stimulus funds that you don't need, but you want to see that money grow. As you saw in 2008, you could have doubled your money nearly in the stock market over the course of a year. And within a couple of years, double, triple, quadruple your money. Let's say you're heading towards retirement right now. And let's say you missed out on the 2008 rally. You know what? Great opportunity for you to play catch up. Putting money into your retirement accounts, specifically in stocks, gives you the best chance to catch up if you're behind on your savings, or pad your savings now before you retire. It's less That's less work you have to do, less work your money has to do for you in the here and now. And now, the next burning question that I'm sure you have. What stocks should I be looking at? Very good question. For that, you're going to want to tune into my video for Rich Retirement TV next week. I will walk you through the best places to be, the best way to get the biggest bang for your buck in the safest way possible. It's going to be a great video. You don't want to miss it. Thank you so much for watching my video today for Rich Retirement TV. I look forward to seeing you next week. And for Rich Retirement, I'm Jonathan Rodriguez, and I'll see you next week.